Hello, everybody. Hey, will the Federal Reserve raise rates next week? Well, in this video, I'm going to break it all down for you. So today begins Rosh Hashanah. For my Jewish friends, Happy New Year to you. I wanted to start out with the United Auto Workers went on strike last week, and that is causing a little bit of upward pressure on interest rates. Not yet, but if it goes on too long, we're going to see that interest rates could go up because used car prices will go up, and that'll be inflationary, and so that could cause home interest rates to go up. Let's go ahead and look at what happened last week. Interest rates pretty much stayed flat at 7.18. Last week they were at 7.12, so not a lot has changed there. But the biggest thing that could raise rates will be the Fed meeting that will be next week. So a lot of things happen with the Federal Reserve, and I just want to touch on one point here. We don't think that interest rates are going to be raised by the Federal Reserve next week. I think they're going to pause this month, and then probably if they do raise rates, it'll be in November, and hopefully that'll be the last time. And we hope that some of the economic news that comes out will actually show that, we're starting to come down, that home prices, are still going up, but I'll get to that in just a minute. But I think the Federal Reserve has some really good basis to pause for just a minute. So I wanted to just show you one of my charts here. Well, first of all, let's go ahead and look at the 10-year treasuries. You'll notice the 10-year treasuries are right above they're right now at 4.29. And the Federal Reserve, so the Fed funds rates, which is the Federal Reserve is what they use to raise interest rates, that's at 5.5%. Now that is a huge margin. We've only seen it 4 times in the last 40 years. So you'll notice in red here, you'll see that it's showing that the Fed funds were above the 10-year treasuries, and then we saw a recession. Same thing over here in 2008, 6, 8, or something like that, which is right before the huge, crash of the mortgage market there. And then you saw a huge recession there as well. And then this is right before the pandemic. It wasn't caused by the pandemic, but it was right before the pandemic when it was just a little bit higher than what the 10-year treasuries were. And then, of course, right now we're at it's probably the largest gap between the 10-year treasury and the Fed funds rate that we've seen, which all indicative of what could happen. And we predict, and my good friends at MBS Highway, Barry Habib, basically is saying we probably will see a recession. And even though people are saying we won't see a recession, there's a good chance that we will see that. So anyway, I just wanted to point that out. Another thing that came out that might that you might want to look at is home prices. So Zillow came out with their home price increase for August. It was up 0.2%. And, year to date, that's pretty much at about a 4.3% increase. We started the year a little bit negative, and then, we saw that, over the last 3 months, home prices are starting to go up. And Zillow's index is on pace for a 7% increase during this full year, notwithstanding some of the losses that we took at the beginning of the year. So a couple of things that are coming out next week that you should look for. Basically, the National Association of Home Builders is going to come out with their housing market index. We need them to build more homes, basically. On Tuesday, we've got housing starts and permits. And then, of course, the Fed fund rate hike decision will happen next Tuesday. And then Thursday, we'll see initial jobs claims and existing home sales. So initial job claims is going to be very, very important because that is going to determine whether or not we see home interest rates start to come down again. Anyway, today's video has been brought to you by Same Day Mortgage. We do mortgages in 24 hours. Hey, have a great week.